We have a lot to go over here in this video. As always, on Fed days, well, we get new information, things change, and Wall Street reacts. I will give you the latest details on that in this video. Besides that, we did get some comments from Scott Bessent and Donald Trump earlier in the day today that also had an impact on markets. And last but not least, we do have all of your Tesla stock breaking news to go over in this video. But first up, let's start with Fed Jerome Powell. And before we get into all of the statements here, not much of a market reaction at the time of recording this video. It is exactly 3 p.m. Eastern Standard Time, so there's a little bit more of the conference still to go. We will cover that as well as this video does progress and the statements that come out. But really, you could just categorize this as nauseously neutral. Like, Powell is not committing to anything. He's basically saying, if you want the long story short, we're going to wait until the last moment to act. Okay? He's saying that both inflation risks have risen, unemployment risks have risen. We don't know what we're going to do. It's going to take some time, and we're going to have to wait for the data to show up. Jerome Powell kind of acknowledges that the soft data is crap and that eventually that will likely lead into the hard data being crappy, but that has not happened yet. And they have no idea when that will happen. And that's why the Fed's not in a huge rush to cut rates, because the hard data still looks good. That's kind of the long story short of today, but we will share the headlines starting now. One of the big headlines here, Jerome Powell says we won't make progress on goals this year if tariffs stay, meaning that inflation's not going to hit 2% and you're not going to see a strong economy this year if tariffs stay. Okay, so just both sides of the mandate could get further away versus, things going back to normal. He says, but we don't know that yet. There is so much uncertainty over tariffs. He also says we would see a delay on getting to goals for the next year. So not just this year, but also next year could be delayed in actually getting down to 2%, keeping a strong, healthy labor market if tariffs are too large. Jerome Powell says when things develop, we can move quickly as appropriate. Again, basically, Powell's going to wait until like the last moment to come in and help. He says the costs of waiting are fairly low, that the economy is in a good place. If, of course, you exclude the surge in imports, he actually says that Q1 GDP minus government spending minus imports is actually around 3% for this quarter, Q1, technically. So it actually looked pretty good. Now, Donald Trump said at 1:52 p.m. today that he is not open to pulling back 145% tariffs. Okay, this is in reference to China. But again, Scott Bessent is meeting with China, and it seems like any moment you're going to be getting a pause on China tariffs. Okay, you almost have to. And Scott Bessent said even that strategic uncertainty is kind of Trump's playbook right now. Like, create chaos. And I think that's kind of just what this headline was designed to do. Jerome Powell says it's not a situation where we can cut preemptively because of the inflation issue that we could see from tariffs. He says we need to see more data. Jerome Powell says we haven't faced the question of two goals in tension in a long time. We have to keep in our thinking now. Basically, it's been a long time since you've seen this much potential upside pressure on inflation and this much potential, upside pressure on the unemployment rate. Normally those things do not go hand in hand. Normally, if you have inflation, you normally have a strong economy, right? Normally you don't see inflation and recessions, right? Recessions are like deflationary. They're disinflationary, okay? Normally these two things do not go hand in hand. Higher inflation and a weaker economy. That's a really bad problem to have. Jerome Powell says there are cases in which rate cuts would be appropriate this year. But he also says there are some cases or scenarios where rate cuts would not be appropriate this year, which is kind of interesting. Markets did not sell off more on that, considering we're still pricing in like 3 rate cuts this year. Jerome Powell says, I can't confidently say I know the appropriate rate path. He says that the president's calls for rate cuts don't affect our job at all. Jerome Powell was asked about what his gut feeling is around the economy and inflation and the path of the federal funds rate. Powell says, my gut tells me that uncertainty is extremely elevated, and the crowd just kind of laughed. He says that downside risks have increased, and he says that risks of higher unemployment and higher inflation have risen, but not yet in the data. He says the economy is doing fine. Our policy is not highly restrictive. Powell says that businesses and households very broadly are concerned, postponing decisions. If nothing happens to alleviate those concerns, would expect that to show up in data in weeks and coming months. Powell says we're watching extremely carefully. We don't see much evidence in actual data of a slowdown in the economy. Powell was also kind of, I would almost say, criticized over their use of QE. One reporter basically said that Powell went outside of the confines of their mandate, and Powell said QE wasn't beyond the confines of our mandate. He does reflect and say we could have tapered QE earlier or faster in hindsight, but that he appreciates the looking back and the constructive criticism, if you will, towards the Fed. Powell says that people are worried, but shock hasn't hit yet. Powell was asked about March projections for 2 rate cuts, says he can't make a projection now. Wait until June. Jerome Powell says the data could break in a way that favors one goal versus the other. Jerome Powell said last year, when said we would not welcome further labor market cooling, the unemployment rate had been rising, a very obvious concern about downside risks to the labor market. He says, fortunately, since then, the unemployment rate has been moving sideways. He says, I can't say how much of a rise in the unemployment rate is tolerable. We need to look at both unemployment and inflation. So, like, he's not giving you any definitive answers on anything. He says if we did see significant labor market deterioration, of course we would look to be able to support that. Jerome Powell says trade discussions could change the picture materially or not. Again, just uncertainty. Nobody knows. So again, at the time of recording this video, the S&P is up 0.2%, not really reacting too much in either direction. You're essentially at the same place you were when the statement came out. Like, you really haven't moved at all. And I think that's, again, just because you didn't get any answers from Powell. What do we expect? What do we want? Until the situation evolves and there's more clarity, we're not going to get any ourselves because the Fed doesn't have any themselves. Okay? Now, I still do think a pause on China tariffs could be coming very soon, maybe as soon as tonight. Probably tomorrow, probably after the bell tomorrow, I would imagine, or tomorrow night, you get a pause on China tariffs. That's my thought before discussions in Switzerland between Scott Bessent and Chinese officials. But again, I could be wrong there. That's not advice. That's not me looking at a crystal ball. That's purely my speculation. That's how I'm positioned in my portfolio. If I'm wrong, I'll lose money. If I'm right, I'll make money. It's about as simple as that. Those are my beliefs. And yeah, unfortunately, Powell was just not really a catalyst in either direction today, like some people wanted. JD Vance this morning says, so far so good on negotiations with Iran. JD Vance says there is no conversation between the US and China about a strategic deal of Taiwan. And JD Vance says that we think Russians are asking for too much. Vance says that we want European markets to be open to American goods. And he says the conversations are ongoing with the EU. Last but not least, Vance says that Trump would be open to sitting down with Russia and China to reduce the number of nuclear weapons in the world. Donald Trump says the court system is not letting me do the job I was elected to do, saying that activist judges need to basically get out the way and let us deport illegal immigrants. Mexico's President Sheinbaum says there's no sign that the USMCA is going to end. Vietnam says they want to buy a great amount of US products. That is according to the minister. Mexican President Sheinbaum says Mexico seeks to lower tariffs on steel and aluminum. And the EU is seen targeting US-made cars if tariffs in trade talks fail. US Treasury Secretary Bessent says the US should have red light or green light rules for outbound investment. No yellow zones. Bessent says, I see up to $2 trillion worth of treasury demand from digital assets. Bessent declines to say which countries the US could reach trade deals with this week, saying it would be detrimental to US interests. But he does say that some trade negotiations are quite advanced towards agreements in principle. Bessent says that China negotiations will begin on Saturday in Switzerland. He says these talks on Saturday are a beginning for talks, not advanced discussions. Again, I think all it's about is pausing the China tariffs. And I imagine by Saturday, like tomorrow or Friday, you're going to see a pause on China tariffs. Before those talks even start, this is probably something that is already agreed upon right now. Like, you know, Bessent probably said on the phone, hey, do you guys want to meet? China's like, not really. Drop your tariffs. Bessent's like, okay, we will pause the tariffs in good faith starting Thursday at 4 p.m. Okay, China, we'll meet. That's pretty much where you're at right now. They're not really talking about trade negotiations, but I do believe they have agreed to meet because the tariffs are going to be paused. I don't think China would meet if the tariffs are not going to be paused. And in all fairness, it probably is a bilateral pausing of tariffs. It's probably not just the US, it's probably the US first and then China shortly thereafter. Bessent says that the negotiations will begin on Saturday in Switzerland, that Trump's trade advisor Navarro won't be joining China talks in Geneva. So this looks like mainly a Bessent-led discussion. Bessent says the Treasury market was well functioning in the April turmoil. We and the Fed have a very large toolkit for treasuries. And he says there is broad investor support for treasuries in auctions, which is true recently. Like, there's been good auctions. And Bessent says it is time for China to graduate from developing country status. Now, one of the big headlines today that specifically took down the headline S&P, which really took down like Google and a couple of other, big tech names, was this news that Apple is exploring adding AI search to its browser. This news actually caused Google to sell off about 8.5% today. It also caused Apple to fall about 2%. So just those two stocks and their market cap weighting in the S&P, it's impressive that markets actually did relatively well today, all things considered. I mean, those are big declines for big companies. Bessent says the US will always meet its debt obligations, but it then was reported that Apple has no intentions of making its own general search engine, but that didn't stop Google's sell-off today. Bessent says that many bank capital regulations may be too tight. Now, this is a crazy kind of quote. Bessent says the market may discipline us one day. We're working to avoid it. Now, what this means is in reference to the bond market, okay? Think about it like this. If people were to stop buying bonds because of inflation, they deem the U.S. as too risky from a, balance sheet perspective and the federal government, people could stop buying treasuries. If you stopped buying treasuries, TLT would fall, right? Because there'd be less buying pressure. Bond prices would fall because there'd be less buyers, okay? TLT is the ETF for the 20-year treasury, so we'll just kind of put this into frame here. When bonds fall, yields go up, okay? Yield is correlated to risk. So remember this. If you ever see a stock that pays a 9, 10, even 8 or 7, 6% dividend, anything above 5%, you automatically know that it's risky. Okay? Because why do you have to pay 6, 7, 8, 9, 10% to entice capital into that stock? Okay? Bessent is saying that maybe one day people are going to stop buying bonds and yields could skyrocket because of fiscal irresponsibility in Washington. looks like that's something they're working on avoiding. Now, the Danish foreign minister says today, we will call in acting U.S. ambassador to Denmark to discuss media report about U.S. plans to step up spying on Greenland. Bessent says that he believes the debt to GDP ratio will drop next year. Citibank says the economy was decelerating even before tariffs hit. The CNN Fear and Greed Index today is coming in at 57, which is now in greed territory, aligned exactly with where you were yesterday, also at 57. Market momentum, extreme fear. Stock price strength is neutral. Stock price breadth, extreme greed. Put and call options, fear. Market volatility is neutral. Safe haven demand and extreme greed. And junk bond demand also in extreme greed. Coming out tomorrow morning, we will be getting a new AI investor sentiment survey. This will be fascinating because, I mean, Wall Street is very bearish right now, even though you've recovered quite a bit from the lows, right? When you were down like 21% at one point intraday, April 7th or so, you're more bearish now than you were then. I mean, the only other time you were more bearish than this over, the last like 20 years, 10 years, was April 2nd of 2025. You had almost 62% of investors who were bearish. Today, 59.3% are bearish. Even after the recovery, that's incredible. 19.8% are neutral and 20.9% are bullish. That is the lowest number you have seen, again, since April 2nd. So even April 7th, when markets were down, huge, down, way down here, people like seemed very scared. Well, they're more scared today than they were then, based on this survey at least, which is kind of an eye-boggler. It doesn't make a whole lot of sense. If things do start to improve and get better, you could definitely see more upside momentum come. And I think the real thing is like, hey, if we start negotiations with China, if we pause China tariffs, the odds of a recession are going to plummet at that point, right? The odds of hyperinflation are going to plummet. The odds that the Fed can begin to cut rates sooner will dramatically increase, all of which is positive for markets. And if you're a hedge fund and institution, you have no choice, I think, but to get more allocated to stocks with news like that. Now, the percent of stocks trading above their 50-day moving average today sitting at about 49%, which is kind of normal over the last 5 years. Like, this is like a neutral market. It's not bullish. It's really not bearish at this point. Just kind of neutral. Now, again, just to say it, to be repetitive, I think a pause on China tariffs is coming in the next couple of days, despite what Trump said today, kind of pushing back against that. I think it's inevitable before Saturday. I could be wrong on that. Might be wrong on that. Again, I am positioned to be correct on that. I am positioned for a pause on China tariffs, which I do think will cause markets to explode higher. It really kills the odds of an inflation problem. It dramatically lowers the odds of a recession. I mean, it creates more clarity on just overall the economy, but especially on earnings with companies that at that point shouldn't be affected by the 145% tariffs, like Nike or other companies that currently are exposed to those tariffs. So let me know what you guys think about this down below in the comment section. Have a great rest of your day, and I will see you in the next one.